Okay then, it's time to look at a different stock tonight. It's similar to CloudMD in the sense that it's in the same market sector. Tonight we're going to be looking at Teladoc Health stock. So obviously if you have a quick look on screen, the reason why I'm going to be looking at this one is because it has been increasing quite rapidly over the past 5-day period. And I think that for the future, stocks like this and CloudMD, a few others of course, do really have some potential. Of course, I'm not saying that all of them are going to be winners, but companies like this and this market sector in general is one of those kind of things where it's not really too popular at the minute, and in the future it has a lot of reasons why it should be popular. We're going to be talking about those in this episode, and we're going to be looking at the finances, we're going to be looking at the previous stock moves, we're going to be looking at who's holding this company and what you should do with it. So if that does sound good, please do subscribe. We're trying to get to that 1,000 goal. We're on about 700 now. Obviously we're a little bit off 700, but I'm just going to round it up for positive purposes. Let's get up to 1,000 as soon as possible. So obviously we don't really need much growth to get there, so if you could just help us, it would be appreciated. On top of that, we now have a Discord server, so feel free to come and join us on Discord. Link is in the description. Obviously we're going to be talking about all kinds of stocks over there. So yeah, on top of that, thank you for all the support that we have got so far on the channel. We're doing really well at the minute, so let's just continue this growth. Anyway, let's get back into looking at why we are making this video, simply because of the way the stock price has been behaving over the past few days. So when we have a quick look at the 6-month period to start us off with to get a wider perspective, we can see this company from a stock point of view is relatively volatile, as the graph is basically all over the place, ups and downs everywhere. But one thing that has been consistent is a few dips over the 6-month period, and then it rose even higher. Of course, we saw a big dip around Friday the 4th of June. That was our low point here. Then we rose all the way up to 237.14. Then we saw another dip all the way down to 183, with a rise all the way up to highs of 224, lows down back to 198, between 198 and 189, let's say, and then back up to like 131. So not bad at all over the 6-month period. 1 month has been quite flat though, and it has been downwards. I talked about this in my CloudMD video yesterday, and it got a lot of dislikes because people just couldn't accept the truth in that video. If you can accept the truth, then you are going to find this one useful. The fact that a vaccine has come out at the minute is probably one of the main reasons why this company is going down. That's not necessarily a bad thing because we are still forecasting growth for the future. However, it is important to note this growth has been, kind of exacerbated by what we have seen this year, with a lot of things moving online anyway. And as things do get back to normal with a vaccine, hopefully, this share price might actually take a bit of a dive, but that is not necessarily a bad thing because, of course, the whole company business practice is kind of a good thing. In the future this will do well in my opinion. So yeah, 5-day period we are still green, good to see. We have seen basically quite a flat week. However, we have slowly been on the incline up until Wednesday the 18th, where we saw a huge increase up to where we are at now. And on the 1 day it is looking also quite green, starting off on 182, finishing off on 191. Put that on a percentage basis and that is 5% increase. Not bad at all. So yeah, what does this company do to start us off with? The website itself is Teladoc.com. You can see here we all had a quick look at this with CloudMD. Basically, it's online doctoring, and we've talked about many benefits of this. Obviously, we're going to have a quick look at some others over here. So, of course, we have this article which we looked at last time. Feel free to go check it out if you want to. And this just talks about 10 simple benefits of this model and practice in comparison to the traditional method. So if we have a quick look, we can see one of these is just the fact that it advances new business models. We can obviously understand that one, it's just a new business model and it allows a company to operate in a different way. Similarly, it improves the patient engagement with remote monitoring. So of course, it's easy for everybody to do, so people are more likely to go and do it because of that. Third of all, it expands access to wider reaches and more patients as well, simply because, like I said, if you are seeing somebody in less time, because obviously they don't have to drive there, you can just see more people in a day. It's just convenient for everybody. Obviously, the doctor wouldn't have to prepare for people coming in, just cross off the tab and go into the next video call or whatnot. So it's obviously easy for that purpose. Similarly, like I said about waiting times and whatnot, this is shown in the 4th point, where it talks about how it improves clinical workflows and increases patient efficiency. Because, like I said, when you're doing stuff from your home, it's a lot easier to do it, it's a lot quicker to do it, and more people are likely to participate because, of course, it's just so simple. Why would you not do it? You know how this one works. It also increases revenue for the practice for the same reasons. See more people, make more money. It's just a more efficient business model. It's just a win-win from either side. Let's have a quick look at the sixth point, where it reduces a patient overhead. This is kind of similar in the sense that obviously with the company's revenue increasing, it means that their costs are also going down for obvious reasons, which we talked about earlier, because they don't have to actually own a practice, no physical buildings potentially, and all they will have to pay is the staff's overheads. With their online laptops and whatnot, and potentially with their salaries, obviously, as well. But other than that, there are no business overheads in comparison to what there are with a traditional doctor's surgery, where you have to pay for the facilities, the lighting, the heating, all the medical equipment, whatnot. It's just a lot more efficient, so it cuts patient costs and reduces the practice's overhead. Of course, it also improves quality of care. We're not going to go too much over that one, and it reduces no-shows simply for the reason which I also talked about earlier. When you don't have to drive there, wait there for a while to get in, it just makes it a lot easier. And this also results in the 10th point, which is improving the patient satisfaction. So like I talked about earlier, this is a growing market sector. This year is what I was talking about earlier, how telehealth has definitely seen a huge growth this year for obvious reasons. But I think it is still going to keep growing in the future, in my opinion, regardless of what happens with the pandemic at the minute, because we all know that this is just a simple and easy to follow business practice, which a lot of people would prefer than the traditional method. And with things like this becoming more available, 5G technology is making it easier to do. It just makes more sense for everybody because it's cheaper from all sides and it's just more efficient. So I think with 5G coming in, this will make it a lot better because, of course, the infrastructure will be there, but we'll just have to see how that one does come out. Let's have a quick look at some other statistics, which is the general size of this sector, and this is apparently 38.7 billion according to markets and markets.com. So we can see there they are valuing this at 38.7 billion United States dollars. Not bad at all, and of course this is just forecasted to grow into the future. So we'll have a quick look at this graph down here. This is the one that I used in a previous episode, and we just talked about how this is a linear path upwards for the next 7 years or so, and I definitely agree with this one, perhaps even steeper than what they are predicting. It will probably curve higher and higher and higher as our technology systems do become more advanced and making it more easy for everybody to access these sorts of things. So for that reason, I think this is definitely going to be a growing sector, and I think this company will probably go with this sector in growth, and that is of course a great thing to see. But what I say does not necessarily matter that much. Let's have a quick look at what some analysts are saying. So we're going to go over straight to our forecasts on CNN. Of course, it's money.cnn.com. Feel free to go and have a quick Google of it if you want to, or just pause the video at any point and watch what's on my screen. Completely up to you, but we're going to have a quick look at what the 25 analysts are saying. So I'm going to break everything down for you so it's very easy to understand. So we have 25 analysts which are offering a 12-month forecast for the stock. They have a median target of $252. They have a high of $305 and a low of $200 exactly. So the median, the one in the middle, is represented a 31.85% increase from the last price of $191.13. So let's have a quick look. On the highest side, so they are saying with good growth and with everything going fantastically, we are looking at about 60% increase for the stock. Great thing to see. So that's growth on the high side. Looking at the low side, they're saying yes, it's not going to grow as steeply, but they are still looking at a 4.5% increase, and the fair median estimate is at 31% increase. So not bad at all. Honestly, good things to see for this company into the next 12 months. So now we have 28 analysts which are offering their buy rating for the stock, and these are basically saying that it's a buy. So let's break this down a bit. So we got 28 of them having a quick look, and this time we are going to break down which ones are saying which. So the majority at 18, like I said, are going to say buy. So 18 people in this study conducted are saying that you should buy it right now. One person is saying that it's going to outperform what is expected of it. The other 9 are saying to hold it, not necessarily buy it if you don't really have it, but then don't sell it if you do have it. And actually 4 underperform, which is do worse than expected, and sell. Nobody's saying that it's going to do that, and nobody has said that since late October. So obviously people are quite positive on this one, and that is a good thing to see. So we've got some other little piece of information down below. We have the current quarter with EPS, earnings per share, at minus 34 cents. So obviously it's still negative, but once it does go positive, I think this should, and at least could, have a positive effect on the company, as it will show that they are finally making a decent amount of profit, which is of course a good thing to see. So quarterly this has grown 20%, so not bad at all. Anyway, sales for the current quarter are at 300 million, almost exactly 300 million.2, so not bad at all. So obviously that's quite the bit of revenue, and analysts are once again saying this will drastically increase in 2021. Good to see, and let's just hope that this does go through. So let's have a quick look at the actual financials. We should do this more in another video with a bit more of an in-depth look, but we can see here over the past few years, revenue has been increasing since 2014. In 2018, which is apparently the most recent one on record, we are seeing the biggest increases. I would say 2019 and 2020 also saw a huge increase as well, most notably 2020 for obvious reasons. So we'll just have to wait until quarter 4 when all these results are published and then the year is finalized. So cash and short-term investments are also up for 2018, probably similar for this year, but you know what, that is absolutely fine. Also important to note, revenue has been drastically increasing year on year. And of course, like I said, if those statistics are right, this quarter we have made as much revenue as we made in the whole 2018, almost, only 100 million less, so not bad at all. And honestly, like I said, this is probably going to be a solid, growth stock for a few years to come. Like I said, I'm not sure whether it will do well with vaccine news coming. Obviously, we all want to get back to normal, so I'm sure a small stock dip is not necessarily a bad thing for that. But for the long-term investors, I would personally say this is a buy. I can see this being quite a stable and good company for the future, and a lot of our analysts on here did say that as well. So I hope you enjoyed this quick video. If you did, please do leave a like and subscribe, and I will see you in the next one. Thank you for your time. Goodbye.